it can become easier to swipe and harder to stop. Before you know it, the cycle of debt would just keep on continuing. You might ask, Sledge, so what should I do? The best move? Always pay more than the minimum balance. And today, we're going to be talking about a financial trap that millions of people fall into, and that is paying the minimum balance on your credit card. And you know over here, Sledging, we get straight to business, so let's get to it. First things first, it might seem harmless or even responsible to pay the minimum balance on a credit card. But is it really? Stick around because I got some answers that might just shock you. What if I told you a $1,000 purchase could take you 9 years to pay off and also cost you almost double that amount by the time you get finished paying off it because you're only paying the minimum balance? Now let's break down what a minimum payment is, because credit card companies usually calculate it in one or two different ways. It's going to be a small percentage of your total balance, typically around 1 to 3%, or it might be a flat rate, either 25, 30 bucks. It could be even $50. It all depends on which one is higher, the percentage or the flat rate. Now always remember, they are going to charge you the higher of the two. When you only pay the minimum balance, it's designed to keep your account current and also to keep you from paying late fees. But it's not designed to get you out of debt quickly. It's more designed so that the bank or credit card issuer can make a higher profit. When you're paying only the minimum balance on the credit card, the amount that you're paying mostly covers the interest. So the amount of debt that you owe usually barely even budget. Let's say you have a $3,000 balance with a 20% interest rate. And keep in mind, in these days, a 20% interest rate isn't that bad. Now, if you only pay the minimum balance, say around 2%, you could end up paying somewhere around $6,000 for that $3,000 worth of debt in a span of 12 to 13 years. Now, that is double what you originally owed. And that doesn't even include if you're still charging on the card while trying to pay down the original debt. And here's the kicker. As the balance goes down, so does the minimum payment. So the process slows down even more. It's kind of like walking on a treadmill and there's no switch to turn that treadmill off, which is trash. It's not trash, because you always have the ability to pay off the balance in full. But it's trash because the system is designed to keep you in debt even longer. Only paying a minimum balance doesn't just cost you money, it can also hurt your credit score by raising your utilization ratio or even just affecting your utilization ratio. Your credit utilization ratio measures the amount of credit that is granted to you versus the amount of credit that you're actually using. So if you're carrying a high balance every month, that ratio is going to stay high, and it's definitely going to affect your credit and more than likely make your credit score drop. And it also affects your payment history. Technically, when you're only paying the minimum balance, you are paying on time. But credit card issuers know that you're paying the bare minimum, and whenever you go to apply for a new line of credit or a new credit card, that could cause a red flag. If you're someone who wants a strong credit profile, paying just the minimum balance won't get you there. Because like I said, paying just the minimum balance is going to affect your credit utilization ratio. Now we're going to move on to something that a lot of people don't talk about, the psychological part of it. And I know this all too well because at one time, I was that person paying the minimum balance on my credit cards and I felt like I was going nowhere. And that's because I wasn't. Paying the minimum balance only kept me stagnant. When you're only paying the minimum balance, it gives you a false sense of security because you're avoiding late fees and missed payments. You think you're in control, but what's in control is the interest. The interest is going to be control of the situation, and you won't know it until you know it. It can become easier to swipe and harder to stop. Before you know it, the cycle of debt would just keep on continuing. You might ask, Sledge, so what should I do? The best move? Always pay more than the minimum balance. But even better, try to pay your credit card bills in full because that's the only way to avoid interest and keep from falling into this trap in the first place. But even just paying an extra $20 to $50 on your credit card bills each month could save you years of debt. You can use the credit snowball or avalanche methods to pay down your debt. The debt snowball method is a credit repayment strategy that focuses on paying off your debt from smallest to largest. It prioritizes getting quick wins, and then you can acknowledge yourself by getting achievements by paying off the smaller debt first. But at the end of the day, you're paying off debt in total. Once one small debt is paid off, the funds that were previously allocated to pay off that debt get rolled into the next smallest debt, creating a snowball effect, and so on until all your debt is paid off or paid down. The debt avalanche method focuses on paying off the highest interest rates first while allocating and paying a small amount, the minimum balance more than likely, on all other debt. This method aims to eliminate your highest interest and save you money by doing that, by eliminating the most expensive debt first. Both of these methods work, but it's up to you to decide which one is best for you. You might want to consider getting a 0% APR balance transfer credit card. These are cards like the Citi Simplicity card or the Wells Fargo Reflect card that give you an option of transferring your balance to these cards, and they give you 21 months of 0% interest to pay off or pay down your debt. But do remember, there are fees involved with transferring your balances to these cards, and if you do not pay off your balance in full, you will owe interest on the remaining balance. So make sure, if you choose to go the route of getting a 0% APR card, that you have a plan to pay off your balance in full before the intro 0% APR promo is over. I also recommend always building an emergency fund so you don't have to rely on credit cards when things in your life go sideways. And please remember, small changes can lead to big results. I know that life happens, but try your best to only spend on your credit card what you can reasonably pay back when your credit statement is due each month. I know it may seem like your credit limit is extra money, but it's not. If you cannot afford something without a credit card, you can afford it if you do have credit cards. So what happens when you only pay the minimum balance on your credit cards? In short, you stay in debt longer, pay more in interest, and risk ruining your credit. But the good news is you're in control. Start small, stay consistent, and break the cycle. Well, if you like this content or it's just entertaining, hit that thumbs up, share this video, but most importantly, drop a salute emoji in the comment section. And remember, the separation is in the preparation. It's your boy Sledge. Salute.